It is June 8th, 2022. This video log takes 30,000 to a million. And what I do is I share my account, all my positions, and then usually talk about a topic. Today I'm going to talk about Alibaba's incredible blast off in the markets, and I was exposed to the move, but not as exposed as I was on that 40% climb day, if somebody remembers. I forget what the date was, but it was pretty impressive. So anyways, before I talk about that, and I might even look at some Alibaba numbers, I want to go over the account so I can log it in. I will do all kinds of comparisons so you can see exactly what's going on. So right now you can't see anything, but this is the account. I'm sitting at almost 190,000. In fact, I hit an intraday high of 191, and now settling at a little bit below 190. Today's performance was up 3.38%, and what really encourages me about this is that I'm just crushing the market today. It's like 4% difference. I think the market's down 1%. By market, I mean the S&P 500, and we're going to take a look at that in a sec. So 3.38%, and everybody likes to go through all these. So I'll go through these so I can show you exactly what's been happening in the week, month, 3 months, 1 year, and all chart. So this is the week chart. The 1 month chart is up 15.55%. You can see there's quite a bit of lows and highs. It got as low as 146 this month, and now I'm sitting at 190. The 3 month chart, here's the low at 139 and now 190. So quite an aggressive climb there, rebound from the lows. This is mostly caused due to the Chinese stocks, which I have greatly reduced as far as weighting in the account, by the way. I've traded them off for the margin. So this is the 1 year chart, which looks quite a bit better than the S&P, but it's got similar movements. It is up 17.75%. And this is the O chart. When I do the O chart, I always have to disclose that I started investing in August 2018 with this account, and that's why it looks so flat beforehand, because it wasn't really active. I just had a few $100s in there, so account started somewhere around this area here, and this is the action post account opening. This here is the surprise. I did not expect the March 2020 drop to be this aggressive, so I didn't really have a chance to reposition it appropriately. So that's why the drop off is so sharp. But anyways, I've been able to regain my footing ever since. So those are the charts. Let's compare it before I go through the account. Let's compare it to the S&P 500. We're going to use SPY as a proxy. So just really quickly, the day's performance in the SPY was minus 1% or so. The 1 week is about up 0.5%, so fairly flat. 1 month is up 1.5%. 3 months is down 2%. 1 year is down 2.7%. And there's a 5 year chart. I can't do 5 year on my account, but the 5 year is up 68. So just to go over it, minus 1 plus half plus 1.5 minus 2 minus 2.7. My account is sitting as plus 3 plus 7 plus 15 plus 27. 1 year is plus 17. So plus almost 18% in the year, while the S&P is almost 3% down on the year, so beating the S&P considerably. So if I were to invest in the SPY, I'd have $30,000 less at this point, this juncture. Now, most of these rebound gains are due to the Chinese ADRs, which had a really nice day, and we're going to talk about that in a little bit. But first, let's go to the account. These are the option positions. In this little square, you're going to find out all the information that you might need about the exact position. You can deduct any information from here. The numbers on the right just represent the daily change in value in dollar terms, and then underneath in the percentage terms. So I'm just going to scroll down real quick. You can pause the video at any moment to try to figure out the exact position if you so wish. These are the equity positions. Since the American markets were down today, Apple is also down 0.5%. But I don't think it's going to drop much lower, honestly. And if it does, I'm going heavily in. Realty income down 1.4%. Main Street Capital, a little bit of a disappointment. Down almost 3%. I might buy even more Main Street Capital soon if it keeps dropping. JD was up 8.28. VIP Shop up 6.46. Or VIP Shop, whatever you want to call it. Goldman Sachs was down a little bit over 2%. DD up 13, although I only have 10 shares of DD. I'm only holding them because I want to find out what happens after the delisting. And Smith & Wesson is actually down almost 3%, including the after hours action. Now, all I need Smith & Wesson to do is be above or at $15 and by the 17th, in which case I'll be collecting all this value right here, over $1,000. Looking forward to that. If you want to see the account tab, I'm inching towards that 190 mark again. If you want to see the investing tab, this is what it looks like. I'm sitting at the lowest margin I've had in quite some time, in anticipation for resumption of the bear market that we're in at the moment. I could be wrong about that, but that's how I'm positioning a little bit. Actually, I'm using some of this in order to use as collateral in order to sell puts against companies. I'm not actually positioning, I'm not doing anything much different, by the way, when it comes to whether we're in a bear market or bull market. I'm assuming that we're in a bear market and this is a bear market rally, but I'm not really doing anything much different. I try to use the current price as my best price, as far as figuring out what kind of deals I should make. I'm factoring in it, but I'm not trying to make a prediction on the direction of the market. Like I'm not good at that, and these are just kind of speculations and guesses. But I am taking the price of the underlying stock or whatever I'm trading into account when I'm trying to figure out whether something is a good deal or not. By the way, I will make a video on something I mentioned on a previous episode, which was my main way of making money, which is the arbitrage between implied volatility and what I consider real volatility. So I'm going to make a video on that. So look for that. It's going to pair really nicely with the video I made on the whale strategy. So if you can look through my videos to find that. I suggest watching that first before you watch the newer one. It's just an image of me in black and white and it says wheel option strategy up top. I think I uploaded it like maybe 10-15 videos ago. Anyway, so I'm sitting at 7.64 margin, which is pretty low. Only $15,000 borrowed, a little over 15,000, representing a very small portion of the account at this point. Total market value sitting constant from last time because I've sold a bunch of stuff. I've reduced my Chinese position quite a bit. It's quite a bit. It's a big change. In fact, if it continues rising, even just a little bit, by the end of the week, I will have no JD and no VIP shop at all into the accounts. It will just be Leap options exclusively. So I'm kind of looking forward to that. I don't mind having all that extra cash in my account. So this is ranked by total return. You can see Apple's at the top, Realty Income, JD, VIP Shop are now in the greens. Goldman Sachs is about flat. Smith & Wesson and Main Street Capital were lagging. By equity, you can see that Apple is almost at $100,000 and everything else is $26,000 or below. So the more than half of the account is actually Apple. You can see that here. So it takes more than half of the pie. I've made a big bet on it, and I've been continuing to buy shares. However, I will be reducing this to 570 instead of 670 if the price of Apple goes over 149 by the end of the week. So that is the the investing tab. Now, let's talk a little bit about Alibaba, right? So all the other ADRs went up today, but you can see how this contract, for example, went up 62% today, but I'm still in the negative. Still in the negative by $1,000 on this 3 contract position. And I plan on holding this for quite some time. Actually, I don't plan on selling it, but you can see that I have $8,000 worth of value here, and then a bunch of contracts for JD. I have 4 contracts here worth about 3,000, and then a few VIP shop calls which are not really, they're like $300 or something. So I have about maybe $14,000 left in Chinese leaps. Sorry, not lips, leaps. Leap stands for a long asset. What was it? Long equity appreciation securities. Anyway, it's an old term. Basically means a long dated call option. One that's usually like 6 months to 2 years or 3 years. However long they can make them. But let's talk about Alibaba here. So Alibaba is up 14.93%, I guess, including the after hours, which is fairly massive, inching on that $120 price point. So what is the catalyst for this? Well, we're going to talk about that later, but the news sources claim that the Chinese regulatory forces have eased up on the quote-unquote famed crackdown, and they've apparently approved 60 online games. That's 60, not 16. 60 online games, the most in nearly a year. So it kind of, the reason that's important is because up until now, the Chinese regulators and government have been talking about supporting their tech sector in the last, like, I don't know how many months, but there's been nothing actually concretely done about it. They've just been talking, right, and not actually doing anything. And now this is a step, even though it's a small step, right? They're just approving some games, but it's a step towards, kind of normalizing things, and maybe the regulatory machine is starting to churn, right? It's starting to work a little bit. And that's important, not because the 60 games, they're not that important, but what's important is the direction, right? The direction that the people in charge are making is towards easing things again, instead of making it harder for the tech companies to thrive. So that is a very encouraging sign, and it's much needed by the tech companies because they've been really hammered down, and they've not been doing well in the past year and a half. And in fact, to figure out how hard exactly it's been on them, we're going to take a look at Alibaba's numbers. So you can see straight away from that graph on the right that the earnings have been kind of shot down, and even though the revenue has continued to climb, not quite exponentially, but almost. So to get a deeper look at the numbers, we're going to go to the financials here. Now, just a caveat, right? Like, these are Chinese numbers. They come from China. They're not audited by the US regulatory forces. So, you want to take those with a grain of salt. In fact, not just that, but just purely the accounting. I'm not saying that Alibaba's got some faulty reporting. I'm sure they're all correct. But the way they do reporting and accounting there is different. Okay, so they count a bunch of stuff towards their earnings that shouldn't be there, and vice versa. They don't count some stuff that should. So the numbers are really like, plus or minus 80, 100%. I don't know. It's really hard to determine. but at least it gives us a look at direction, even by their metrics. Okay, so I don't think it's completely useless. So let's take a look at some numbers here. So first off is the revenue, which continues to grow. I like to look at the quarterly because it gives me a little bit of a better picture quarter to quarter. So next thing I like to look at is the operating income, which is okay. It's not nearly as good as 2019, the end of 2019, beginning of 2020, midway through 2020. So not nearly as good, but it's still good. It's still on par with like 2018-17. Now, next thing I like to look at here is the shares outstanding, and they have actually been decreasing. So Alibaba is making good on their pledge to decrease the total amount of shares that are out there. I think this is a pretty good move considering they have a ton of cash and not a very good way to employ it at the moment. Considering all these new rules and regulations, I think it's a pretty smart move to do. So you can see that they've actually been decreasing the number of shares just like they did in 2014 apparently, instead of increasing and trying to grow faster and faster. They're still growing, but they realize how cheap their shares are, and I think it's a good move financially to buy some of their own shares at this point, reduce that liability. So next thing I like to look at, obviously the profit margins are not doing very well. But you see how much of a difference there is between operating margin and profit margins? Because the way they do their accounting is different, right? There's some kind of outsized cost that they put into there that firms don't normally do in the U.S. I think part of it is like regulatory fees. Others is things like stock in their portfolio appreciating or depreciating. I think they count that towards earnings as well. But don't quote me on this, right? I may be wrong, but you may want to consult an expert on Chinese accounting. So that's not me. Okay, now taking a look at the statistics, we can see that the enterprise value is at 271 billion. Market cap is at 320, suggesting that there's about 49-50 billion in cash that they're holding. We can confirm that by looking at the balance sheet, and you can see that they have $49 billion in net cash. Now, the next thing I like to look at here is some of the ratios. The price to earnings ratio is 35, but we saw how muted the earnings were, right? And how affected they are by outside factors. So this number is actually, to me, a little bit unrealistic. The forward PE looks to be about 10, which sounds actually more in line. And I do think that their margins will improve because right now the profit margins are really low. In fact, we can see the margins right here. Gross margin is 36%. That sounds about right. Operating margin 8%. Profit margin about 7%, which contradicts the last quarter, but that sounds about right. And I think these margins will improve again. They used to be higher. I think they will improve once some of the pressure uplifts. But there is still risk, and I'll tell you the reason why I've been actually decreasing Alibaba in my account. This is the week performance, by the way. They're up 30%. And the reason is because I'm afraid that just the nature of the virus in China, the way they treat it is they have the zero tolerance policy, right? And things are easing now. But the thing is, the virus just, as soon as people go back to work, it's going to re-emerge, right? So I think there's going to be a cascading series of lockdowns all over China. It's going to be a mess for a very long time until they either give up the policy, right, or figure out how to live with it. So I don't think we've seen the worst of it yet when it comes to lockdowns. And until, the people start pushing back against it, it's going to continue to affect the economy. And it didn't affect the stock market the same way in the States, because number one, we're an importing goods nation, right? So we just kept importing with all the money we get printed fresh off the press by our government, and dispersed through small business schemes, unemployment benefits, and stimulus checks. It's not the same in China. First of all, they didn't issue as much support for the regular person. They didn't just start, spraying money around. They're much more conservative fiscally when it comes to that kind of stuff. And second of all, the lockdowns affected them much more greatly because they're producing. Everybody there produces stuff. So if everybody's staying at home, nothing gets produced. Whereas we're the consumers here in the States, so even if we're locked down, we just keep consuming. Yeah, maybe not as many services and things like that, but we're still gonna buy stuff. In fact, a lot of people went out and bought a bunch of cars, right? Or they bought a bunch of little gadgets and toys and spent time shopping online for all kinds of stuff. They bought new phones, etc. So it's different. It's a much different dynamic. I think it's gonna be, and the market knows this, and that's why these Chinese stocks are bouncing up on the relief, the loosening up of the lockdown policies. So those are still risks that I think will persist for some time, and that's why I'm reducing my Chinese position. That is not the same strategy. I have multiple strategies going into the same account, by the way, so it's not a case of me not trying to guess the direction of the markets. In this case, I am trying to make predictions because this is separate from my option selling strategy that I'm doing for the account, the main bulk of the income. So this is just a small portion. Now it's only $15,000 or so worth of leaps that are left. If the Chinese market continues to climb over the next week or till the end of the week. So I'm making a directional call, and if China does not do well in the next couple of years, I will lose that money. So, but if it does well, it has the potential to be a really big wealth builder for me, even if I don't touch it from here on out. Currently, these contracts are sitting at a tiny bit of a loss still, even the 30% rise in Alibaba in the last month or week. But I'm hoping, I think there's a good chance from here that despite the continued challenges that I think the Chinese economy will face, that these leaps will actually turn a profit for me in the long run. Alright, I've already made this video long enough. It's been 23 minutes plus, so I'm going to end it right here. Hopefully you'll had a positive day even though the market had a negative day. Let me know how you did in the comments below. Alright, peace out.